The following is a presentation of TFNN. It is now time for the Diagnostic Trading Hour with your host, Darrell Martin. Now, Darrell Martin.
All right, folks, welcome on here to the Diagnostic Trading Hour. I'm your host, Darrell Martin, right here at TFNN.com. Don't forget you can listen to us on your mobile phone at TFNN.mobi with 9 hours of live trader radio a day. And run 24 hours a day, but making sure you get that live audio every single day. Let's check out where the market's at right now. We got the S&P up 9 points. The Russell's up 4.2. Nasdaq is up 22 and a quarter right now. We got the Dow up 65, and still pretty much a choppy market overall, though. Looking on over at oil, it's up 34 cents. Natural gas is down 13.13 right there. That's 3%. That's a 3% drop in natural gas. We got corn right now. It is down 13.5%, 2% down on the day. Soybeans down 4.25. So a pretty small move on soybeans from yesterday's close right there. But definitely some different moves if we go and look at the charts as a whole as far as how far it's moved. We'll go ahead and look at that here in just a moment. Looking over at euro dollar, we got it up 110 pips right now. Aussie dollar is up 39. Pound dollar is up 80. U.S. Canadian's down 45 pips with the U.S. franc down 80 pips. Euro yen is up 59. Pound yen up 28. U.S. yen down 36 pips. Gold is currently up $21 on the day. Silver is up 1.5% along with gold, and copper right now moving on up. It's only up about 0.5%, so it's not keeping up with the other metals, but gold and copper sort of moving in lockstep on percentage right there and what they're doing. So with that, let's check out. We had some news come out over this morning, overnight, all that. Let's pull the different pieces together and see what it adds up to. What could we take advantage of? Were there some trades? I talked about a couple trades yesterday in passing there, so we'll go in and look a little more in detail and see what we had. So let's see here. Last night we had Australia coming out with their building approvals number and their private capital expenditures. The building approvals month over month came in at 9.1% on an expectation of 4.1. So that is a huge improvement. Private capital expenditures actually dropped down quite a bit. What are private capital expenditures, you may ask? It's basically just an economic indicator where it goes in as the total inflation-adjusted value of basically new capital expenses made by private businesses. So how much money are they spending? So the private businesses are spending less, but more building approvals are happening. So it sort of happened all at the same time. It happened at 9:30. So we go on over here, and we can see right there at the 21:30 hour, there you get that boom, just a shock up and down. Really an impossible trade to make on this fork by itself. I mean, the thing flew so fast. But a great trade for Nadex, and right in those 0.7 deviation levels, you can see right there, and it actually flew up pretty good. We got to move from, 96.16 up to 96.90, so a little larger move than expected. So it was a good move. It took a little time to get there, and that's one thing I've noticed on Australian dollar, on the Aussie dollar, is it will definitely take its time. So it does move. It moves up to 96.74. We got that's a nice, 60 pip move right out of the gate, and that's just because that building approval number was massive. That was just a lot larger than expected, more than double the expectation. And it usually is off by some, not off by that much. Last time it came in at negative 5.5. And they had expected it to be at 1.2. Well, this time they're like, well, we think it's going to go to 4.1. And then it goes 9.1%. So it was like 5% under, almost really 6% under what they thought it was going to be last time. And then it jumped to 9 or 5% over. And the difference is like 15% improvement in the housing market over there in Australia. So that's why we saw that big move. Overall, it's not a big enough move to move the entire economy, as you can see, because, it only moved like 0.7 deviations. So it wasn't really so much an impressive move. But it definitely was, a solid move. You got 60 pips out of the gate, boom, done. That would have been a take profit order right there if we got the trade on for around $40. then you could have basically made 40, made 20 to cover the other side, and netted $60 on that trade really quick. Now, as far as the full move, all the way up to 96.90, I mean, you're talking like 70, 80 pips right there. That took its time. It didn't get there till about midnight, and came back down, bumped back up, several times. Then it came back down to where it was later. And this is one of the things we talk about occasionally is news trades and trading them on the pullbacks. So it's sort of like I'll talk about sort of like the sentiment reversal indicator when like a market explodes on high volume, and then it just stops, it hesitates, and then it pulls back to where it was before the explosion. It's sort of the same thing, but it's on news. So it explodes up, takes off, gets all the way up there. But on this one, the way that you can trade it is, one, you could when you see that hesitation level. I mean, we hit the same price level like 4 or 5 times between midnight and about 6 a.m. So right here, I'll put a little rectangle on the chart here. So right there, like we're hitting that same point, so just boom, 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 over and over. So that pullback is a trade that you could look at potentially placing. Now, if I'm doing this, I'm going to want to do like a binary, like a $20 binary. Or I'm going to want to do a low-risk spread that I don't have to use a stop on. Because I'm basically going for a volatility, a large play. And I know what my target is. My target is where was it at before the news. So like right over here, I'm like, well, this is where it was at before the news. I'm going for this level, this 0.9616. And so I could literally go over here at any one of these. Now I got to have time for it to get there. So I'm probably going to be looking at more like a 3 o'clock expiration. Or, you got 3 o'clock, you got, 7 p.m., 11 p.m., 7 a.m., and 3 p.m. that you can trade sort of around the clock. So I'm probably looking at a 3 o'clock expiration. If I can get that trade on for about $20, which is a very reasonable price, down there maybe. Now, the big thing is you want to get it out of it. So when it gets down there, get out at like $50. So you make $20, $25 in the trade. So trade 1, you're doing a straddle. Okay, right here before the news. Straddle, you're basically making money if it goes up, if it goes down, in either direction. Trade 2, you could look for a potential pullback. But you need plenty of time. That pullback can be fast, it can be really slow. Trade 3 is the retracement back, because often what you'll see, go back and look at news reports and see this. A lot of times it'll pop up, it'll do its high, it'll pull back to where it was before the news, and then, that was positive news for Australia, right? So, there's just a lot of orders sitting down here. They're going to come and pop them all, get all these people out. And so they go in there. So trade 3 is then buy back again when it's at the price it was before the news. This is why you'd need something like a binary or a spread that you don't have to worry about a stop loss on, because you don't know how far down it's going to go before it finally comes back up. But if it does come back up, your expectation is it'll get back up right around to that high area, and which we're going to target the deviation level because it's going to be the area where we expect the consolidation to be taking place. And so right as it goes back up there, that's your trade again. So we're going both directions before the news. Then if we see a solid, double, triple top, resistance, whatever you want to call it, and we want to do, a pullback after that massive volume explosion and everything's calmed down, we play the pullback, and then we play the reversal off the pullback from the original entry price. And this is sort of like taking the news trade again, but only putting money in one direction. So, again, these 2 trades could be shorter time frame. These 2, I'm really looking for 3 o'clock expirations. So I want to be able to get as low risk as I can on the trade. But that's just one way to play the Australian dollar. There was other ways to play it this morning. So one of the trades I talked about doing to some traders we were looking at, and I noticed on the unemployment claims on the preliminary GDP, specifically, the Australian dollar usually is one of the smallest movements in currency pairs. Rarely does it break 40 pips. It's only broke 50 pips like 25% of the time over the last 5 years on a GDP or unemployment claims announcement. So therefore, I was looking at a butterfly. And so I looked over here at the 8:30 news. It's about to come out. And so I go, okay, 9,600. So that puts me up, ideally at least 40, if not 60 pips. If you can get a 60 pip, that's going to be your more ideal target. But you go up here, and I think the number I actually posted was like 49 or 50. But if you go over here, and we'll just plot it right here. So you put it there, and then you go about 40 to 50 pips below because you want to have that room. Okay. Especially knowing that 25% of the time it doesn't even move 50 pips. And right here, we go into where that price is right before. And then plot that on. So 96, that's going to be like 94.50. So basically, like target looking for a binary right in that range where you can trade it. Now, it could be even tighter if you wanted to, but if you can get on one for around $25 on each side, $50 collectible trade, then you actually have a butterfly trade, and that implied volatility should bump out those strikes. And now I'm talking about getting in like 10 or 15 minutes before. When I'm doing the new straddles or the new strangles, I want to get in 25 minutes or more before the trade. Okay, now when I'm doing the butterflies on the news, meaning this is a pair I expect to stay within the range, then I want to get in like 10 or 15 minutes before the news, because that's when the implied volatility comes in, the big rush for all the options comes in, and that's basically when I expect the market to, explode on that announcement, and or not explode on the announcement, as the case may be. But so right there is just one of, like I said, many ways that you could play the news announcement. And let's see here, a couple other ways that we could play it. We got multiple pairs, so we could look at different pairs that you could play it on. One of the ways that I looked at being able to play it was simply by doing the dollar franc. And I've been doing the dollar yen a lot, and I just recently moved over to really focusing on the dollar franc. One of the traders that I talk about a lot of these news trades and everything with, we're going into it. One thing we noticed was the dollar franc is consistently usually cheaper than the dollar yen, which makes sense. The reason that makes sense is because of the volatility that's been happening in the U.S. yen because of what Governor Kurata is doing over there with his major make vernacular like a Boy Scout pumping of QE. So we trades you can go and look at. We'll check it out right here. Dollar franc. Let's see how this trade played on out. And so right there on the dollar franc, it's sitting at one deviation. By the way, it's been sitting at one deviation since the post-news movement. But right here at 8:30, we can see right there, it's 96.34. So we had about a 100 pip move right on the news. So that's a fantastic movement. And moved on down. Easily could have gotten the trade for less than 40 ticks. Now, the expectation was not what I thought that the GDP would be off by more. GDP wasn't off that much, but the one thing that did add in is the unemployment claims are actually off. So we'll talk a little bit more about this trade when we get back and see if there's any other way that you could possibly play it. We'll be right back after this break.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Victor Jones, or Darrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pezzavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Darrell takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
All right, folks, let's go ahead and check it on out. So, Dollar Frank. What kind of trades were available to you? So not only did you get the nice, perfect one deviation move, but is there anything else that we can do with what came on back up? So let's see. Go ahead and pull that up right now. And let's see if there's any potential trades just with this thing just sitting here doing a whole lot of nothing. And a whole lot of nothing can be worth a whole lot of money. So let's see if we got something. Okay. So I'm going to scroll on down and let me move this chart over for you. So give me 1 second, I'll put it in there for you. And, sorry, one more minute. And what I want to show you is the binary scanner. Because with that, you can go in and you can find trades like when the market's doing, nothing. Right? So, pull this up. See where everything is sitting at right here, and pull this over to this screen. We'll try to share a couple screens here so that way we can look at both things at one time, and that basically allow you to view the chart at the same time as you're doing anything else on here. So let me close that down. There we go. Alright, so we'll put the chart to the right or to the left, and we'll put the binary scanner over here. So as soon as you log in, if you want to get access to this binary scanner, which makes life a lot easier when you're trying to trade over on the Nadex exchange, then just hop over on tfnn.com, click on the spread analyzer there, and you can get a 2-week free trial. Check it out, see how it works. Okay? So let me shrink this down. There we go. Make this larger. And let's pull up some premium collection possibilities. See if there's anything that we like. Okay, so I'm going to go to the binary scanner. Then I'm going to go, you know what? I want to do in the money trade. So I'm going to deselect the out of the monies. And I'm also, see if I can stretch this out a little bit further. We'll pull this out of the way. I'm going to narrow down my range, okay, of like expiration times here. Because I don't want ones that are expiring like in a week. I'm talking about ones that are expiring like in the next 30 minutes. So I guess we gotta give it like maybe an hour. There we go. Okay, and then we're going to look at, say, dollar franc. It's sitting at 1 deviation, right? So we go to dollar franc, check that out. Now, obviously, I don't want to collect 50 cents to, risk 99.50. So let's move this up a little bit here to $70 risk. And maybe cap it at, say, 90. Okay, so 70 to 90. And we'll go back down here to dollar franc. And there's one popping up and down. Okay, so we'll see here. It'll pop back up there in a second. It's going to be pretty tight at the moment. So 95.32. Now, one thing I will tell you is a lot of times I like these when we get closer to when multiple times roll over, so like at 3 o'clock, because you'll have the dailies and the intradays both expiring at the same time. So the nice thing about that is you'll actually have a little more variety in your strikes. But what this does right here, it puts us up at like 95.42. There we go. And now we got one at 95.32. So we got right down here, 95.32. Okay? So we're right in between that range. I mean, you're only talking 10 ticks. It's not a massive range. We got 30 minutes left. Sort of cutting it close for 30 minutes. But, just so you can see how this works. Okay? Let me log into my demo account up here. So at nadex.com, log in, throw this on. And it's really good just to go in and demo these, just to start seeing how they work. I mean, don't worry about winning and losing in demo to begin with. Just learn how to actually use it. So how to place the trades, how to get out of trades, how to get into trades. And then you can move forward from there. So you got to get your structure down first. Structure is your platform, your data feeds, how to use things, how the instruments work. All right, so now that I'm logged in, I'll click that one, and I'll click on sell right here. It'll open up both tickets for me automatically. So right there and right there. So I'm going to buy in this one, sell in this one. Okay, so I'm going to hit place order and place order. And I want to make sure I got filled. Okay, so let's move these up so we don't lose them. And I'm going to go over here to Nadex, open positions. Okay, so I got my 2 open positions right there. And I'll talk about how this trade works, how we make money, what we could make, what we could lose, and the benefits of it. Be right back after this break.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. Or click on the Nadex banner on the front page of tfnn.com. Futures and options trading involves risk and may not be appropriate for all investors. Tom O'Brien's daily newsletter, Market Insights, gives you Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. With Market Insights, nothing is left to guessing. With the market at record levels, volatility is here, and now is a perfect time to take advantage of a 2-week free trial to Tom O'Brien's daily newsletter, Market Insights. As recently as March 26th, Tom advised his subscribers to liquidate their 4 short-term equity holdings, closing out all 4 positions for a combined 15.9% profit, and on April 1st, Tom advised his clients to sell their longer-term position in AIG warrants, locking in more than a 40% profit in just that one trade. If you'd like to see the kind of newsletter Tom O'Brien sends out to his subscribers each morning, then sign up for your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. The Art of Timing the Trade Charts has officially launched at TFNN. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind software, The Art of Timing the Trade Charts allows you to scan for Fibonacci formation setups, including Gartley's, butterflies, ABCs, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the market for stocks just beginning to form the trading patterns that many investors spend days, weeks, and even months searching to find. As part of our introductory pricing, we're offering licenses available at only $59 per month. We're so confident that you'll love this new outstanding piece of charting software that we'll even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Lock in your low price today by ordering your copy at TFNN.com. Darrell Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Darrell Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
All right, folks, welcome on back here to the Diagnostic Trading Hour. So just going over sort of how this trade works and, what you can do. And one of the things I think people do is they go and they how do I put this? They take on more risk than they have to. You can get out of trades sooner, things like that. We go and we sold a trade for 70, or actually, sorry, we bought for 74. We can sell for 86 right now. So that means we're up $12 on that trade. The other one we sold for $28.50. Right now we can buy it back for like $58.50 or $54. So we're basically down $20 on that trade. If it gets to your strike, you can optionally choose, okay, just to get out and only to have a $20 hit on a $50 potential reward. But when they're this close, when they're only like 10 ticks wide, you should expect them to, get hit over and over again. So they're only 10 ticks wide. You're basically just looking for a range-bound area over a period of time. Now, this is 30 minutes out. Usually I like to do them like 5 to 10 minutes out. Find that works a little bit better. Now, another strategy that you can take advantage of is you can go on here and, like we had this one that we bought, right? We bought it for 74. Let's set a sell for 95. Okay? And then we had a sell over here, okay, where we went in and we sold it for $28.50, okay? Let's buy it back at 5. By doing this, Then when we get the oscillation up and down, we get out of the trade earlier. And sometimes what may happen is it may like spike up like this and you get out of the one you bought. Okay? And then it could fly down. The one you sold makes money. The one you bought would have lost, but since you got out before expiration, because you took that profit, that extra $5 off the table, then you actually have a trade that's net profitable. And we can look at this trade and go, well, what price did it get up to? Let's check it out on the chart. So over here, could we get out of this trade already if we already put that in? Not yet, but pretty close. It got up to 94.50. Now, that was on the what? That's the mid price. Okay, so let's see on the sell price. Okay, we got up to about, what does it say here? 91.50. All right, so 91.50 would have been the bid price that was available. Now, you still could have got filled. A lot of people don't understand that charts are reflecting the bid, the market's bid and ask. That charts are not reflecting, unless you have like a last option, the fill price. Okay? Meaning, I could go in and I could put in a trade right now at a price better. So I could say, you know what, I want to buy this contract right here for, $70. And when I put that in, here's what's going to happen. It's actually going to bring up the bid price because I'm bidding the market up when I buy. Okay, so it sounds funny. You're buying at the offer, but you could bid up the market. So I could put 70 on there and watch how this changes to a 70. Right. I didn't change to 70 yet. Oh, okay. Hold on one second here. And close that out. That's why you do everything on demo, especially when you're on air. There we go. But so I'm going to bid the market up to a $70 price. And let's see here. Yeah, there you go. Get out. There we go. And on this one, so by doing this, let me put it a little bit lower because I really want you to see how this works. I'll put it at, say, 65 on the price. And then I'm going to hit place order. Okay? And watch what happens over on the side here. I instantly bid the market in to 65. Okay? So that literally is how that works. You put that in. I can do this on any market I want. I can flip over here to say, we'll say oil. All right? With the oil binaries. And we'll go right down here. And let's find one that's at 82. Okay, this is nice wide spread there. So if you want to call a spread nice and wide, I'm going to put one, and I'm going to put it at 80. And watch how the price goes from 76.50 to 80. Okay? Boom, I just bid up the market. So the reason I'm saying that is I bid up the market by putting in the offer, but that's an offer. If somebody decides to hit my bid by putting in that offer on the market, by filling it, that doesn't change the chart. The chart's going to show what the market's bid and offer is. Okay? So I'm only going to see the market bid and offer on an actual chart. The actual fill prices, you're going to have to look at time and sells. And you can even see time and sells on Nadex. I don't know if you know that. You can go over to Nadex.com, and they have a time and sells button right down here. So you can go in. It'll refresh about every 15 minutes, and you can see all the trades that have fired off inside the time and sells. So it'll actually show you all these trades, 10, 20, 50, 100 lots, whatever, that people are doing. But you can see every single order and every contract that's placed in here. So quite a few. Just keep going and going and going. But all the time and sells happening throughout the day. These are the actual fill prices. Now, if you bought and the offer price was there and it traded through your offer price, you got filled. If you sold and the bid price was there and it traded through your bid price, you got filled. Okay? So you can know that for sure, but you may have got a better fill. And that's the one thing you don't know about charts. You may have actually got a better fill than what was posted. All right, well, that's not really your trade, so let's just shut that one down. Right there. There we go. We can cancel out the small cap now. We're done with that example. Shut that down. All right, so now we have looked over $1 franc trade on. We're letting it move up and down. And, it's collecting premium. And this is one of the trades I like to do a lot. I go in just to collect premium. And we did it yesterday. We put on a euro dollar and a pound dollar one. So, especially when you can get them right near one of these deviation levels. And that can be obviously beneficial there. But you can see we're up 750 on one. We're down 13 on the other right now. Most of that is just bid-ask spread. I mean, you think about it. When we got in these trades, we were down about $10 just from the bid-ask spread alone, from $5 from each side, right? So if I go over here and just to show you what I'm talking about, if I pull up the Forex binaries and I pull up the dollar franc and I go over here to the 2 o'clock, then you can see right there, I mean, there's about $6 there, about $6 there. So, I mean, we're down about $12 on bid-ask spread. So we're actually up right now from where we were at when we got in. We're just not completely positive at this second. But we're up more than the bid-ask spread was originally. So as they come together, and then, again, you can always choose to get out. You may decide at some point, you know what, I'm just going to take a $20 hit here, I'm going to take a $15 profit there. I'm going to lose $5 because it looks like it may expire above the money. Why would you do that? Well, there's a couple reasons. One is you're really going, hey, I want it to be range bound. And you might have a limit. Maybe it's not the range right here. Maybe, you go about maybe another, 10 ticks up. You're like, if this thing goes up to, say 50, then I'm definitely, I don't think this thing's coming back. So I might as well go ahead and just, limit my loss and move on the trade. What's the other reason you might decide to hop out early? 2 to 3 minutes before it's going to expire, so like at 1:57 p.m., okay? The market maker's not going to place quotes because it's almost impossible to calculate probability of being in the money by a few ticks back and forth with 180 seconds left on the clock. So they're not going to take on that risk. So some other trader has to take on the risk. And so what's going to happen is you're going to have little to no liquidity in those last 2 to 3 minutes right before expiration. And at that time, you're probably going to want to decide, do I want to not be able to do anything about this for 2 or 3 minutes? Because if it moves against me, I'm toast. Okay? If it stays where it's at, I get maximum profit. So you sort of got to decide at that point, and you might want to decide just to get out of the trade and take on maybe a $5, $1, $10 loss. You may actually be able to take in a $10, $20, $30 profit. Okay? Right at that point versus risking having a $50 loss if you're right at that point, like 2 or 3 minutes before expiration. So just a thought, some things to look at while you're doing the trades. But that was our dollar franc trade. That had a nice move on it right there and on the news, and was a good news trade. And we also had some other news come on out in the list last night. So let's pull that up. Let's look at it. Check out the currency pairs that were affected. Switzerland, by the way, they had their GDP come out last night at 1:45 a.m. and that came in much better actually than expected. It was the quarter-over-quarter, wasn't their preliminary, and they release it quarterly about 60 days after the quarter ends. And again, it's 0.6 on 0.2, and it came out at 1:45 a.m. So if we go over here, go to right over there, 1:45. So you saw a little bit of strength real quick on the franc. And it's sort of funny, when it goes down, that means strength? Well, yeah, because you're dollar franc. So if I buy the dollar franc, I'm long the dollar, I'm short the franc. If I sell the dollar franc, I'm short the dollar, I'm long the franc. So that's why you saw that pop down. And then we had some other news that brought the market up and then crashed on back down. And like I said, just hanging out at that deviation level. Now, what else do we have? Let's see. We had a little variety of announcements on the USD CAD that came out. So let's go ahead and check out the dollar CAD. And we can see right here, we had a good movement off this trade right here. I mean, this thing just exploded. And right there, you can see this thing moved down 1.5 deviations. In about an hour and a half. That's probably the best trade of the day on news right there. But preliminary GDP, unemployment claims, you had 3 CAD reports. 2 CAD reports came in negative. 1 CAD report came in positive. But it was the most important report that came in positive, their current account. And then the U.S., we had a GDP that was a little bit worse than expected, 0.1%. I mean, everybody's just really skittish right now with the market being at highs. But also the other thing is over at the unemployment claims, 354,000. The number went up, which is bad. That means more people filing for unemployment. And so, but we saw a big, nice USD CAD move, again, right down to 1 deviation again. But basically a 79, 80 pip drop. And look at that perfect move, just right down there. Stops on a dime. And worked out well. And let's see, so that's the USD CAD trade. Let's see, what else do we have that you could have played off of last night? We had some euro dollar and some pound dollar, some medium impact announcements. We had some good moves on a little bit of this, so let's look at the euro dollar right now. And so over here on the euro dollar, we got to move up, and I mean, it just exploded right on the news as well. Moved on up, and then it hesitated a little bit. Waited for the market to open up. When the market opened, took off the rest of the way. I've been noticing that trend quite a bit. You'll get a news pop, pause, market open, pop again. So that actually could be a great second potential entry in the direction of the news after the news comes out. So you get the initial pop. Okay, so here's a little additional potential strategy for news on that comes out like at 8:30 in the morning, which is an hour before the market opens. The news comes out, it moves, it hesitates and pauses, and then usually it'll take off again in the same direction right after the market opens. So you could take the initial one, or you could take the second one. This is sort of like the retracement, like if it pulls back and goes again. And anyways, that moved up 1.5 deviations right there. And you can see that popped a half a deviation, 0.7 right there, hesitated. Then it popped to 1 deviation and hesitated. And then it popped to 1.5 deviations, and now it's just chilling out. So that's chilling out. We got, what, 13 minutes left. Let's see if we can see a potential euro-dollar trade over here. Okay. So notice how it's flipping sides now. Now the upper-lower one ranging around there. And we are net positive right now on our current butterfly. Let's go ahead and check out the euro-dollar. So right here, got the same settings. We don't have to change anything. And to see, do we see a trade? There may not even be a trade that qualifies. And it looks like there might not be one that's going to qualify. So I can always reset my filters if I think something's wrong to see everything. And but you can see right here, I mean, we got like 5, 50, and 90. So there's really nothing for us on this. Now, one of the other things is if I go, hey, I'm looking for a range-bound trade about this time of day, lunchtime. Yesterday we made $100 doing this. Go through and just look at the list. See what you can come up with. So, and, you don't tighten it down. You want that, really short. We're talking the next 15 minutes, okay? So there's nothing on euro dollar. Oh, we got a pound dollar potential. We got a dollar yen potential. We have a pound yen. There we go. Euro yen. Dollar franc, nothing there. US Canadian, nothing there. Okay, so we got euro yen, US yen, both are sells. One of them is just way too cheap to be worth it, so let's just get rid of that. Got nothing happening on pound dollar that's worth it. Got nothing happening on euro dollar. Aussie dollar does have potential trade. So we got a couple buy potentials right here. One sell potential. Okay, so we got a sell potential, 131.72 on the euro yen. I'm going to go ahead and throw that on right now. Yen is trending down. Be an easy premium collection trade. Gonna take it, boom, and end the trade. So as long as it stays below that for the next 10 minutes, we're good. All right, we'll be right back after this break.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil's subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page at TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments.
Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
All right, so we got a couple trades going right now. And we got this Euro-Yen trade on. It's really pushing right up there, and we only have a few minutes left till expiration. So this one is going to be a little bit close, okay? So we put this trade on. It's right at the level. And so one of the things I'll talk about to traders, I'll go, you know what, sometimes it's okay just to take the loss and move on. So what we're going to do on this one is we're going to take a small loss on the trade. If we want to, we can go in and close it out. Look at where it's at, 43.75, 72. Let's get out of that trade, close it out. We still have a couple trades on that are looking decent, so we can decide what we want to do on those. You can close, again, this all you got to do is close trades. Okay, very simple. Now let's check out our original butterfly, which is the main focus of the show today. See where we're doing on that trade. And show that one to you. Okay, we are pretty close. 95.32 on 95.42. That's our range on this trade. And right now we're sitting at 95.35. Okay? And this is something that's interesting for you to consider. One, we're only like $1 away from taking our profit on the long. But, you know, depending upon the moment, I mean, we're only down maybe a couple bucks on the other trade. So look at this. We sold at 74. You know, we're only down, say, 250, 350, okay? Now, we will make 25 bucks, like, on that trade in the last second, okay? Like, right, now it's up 19, Okay, so, I mean, these things are crazy volatile. I mean, you see how that just happened there? It was like down 3, up 20. So that one was up 20 and then, up 15. So now we're up 30. Now we're up 34, 35. So it's going back and forth, back and forth. And this is a point where you go, I'm done, So you may decide to hop in here. Here, let me show you this. You may go, I'm up 22.50. Might take profits at 5. I think I'll be okay with 6. Okay? I'm in the order. Get rid of that one. Okay, done. All right, that's all but $1 on the trade. And then now I got this other side I got to deal with. It's up at $7.50, $8. Is it worth, in the next 4 minutes, giving up all the profit I just made? I'm up $8. So I may want to have this order open and ready. Even if I'm not going to do it, I may want to have it open and ready. I could decide just to hop out if I wanted to. If this thing ticks up at all, it's going to grab another $10 of profit. If I want to right here, I can literally just go, you know what? I have this thing to take profit at 95. Let's just take it at, that's at 91. Yeah, let's just take it. And I can take it right there. $10, boom, just locked in a $10 profit on it, on the trade. And let's see, it's working. It's still trying to get that fill. Let's see, let's try it again. There we go. All right. And let's see, we'll cancel this one out. And we close the trade out. And we're done. So it's a pretty simple method. It's just like range bound. It's just that last couple minutes can be pretty intense when you're trying to do the trades. So, one thing I'm trying to teach you on this is just how to, manage that trade. And one of the important aspects I'm managing it is going, you know what, in these last 2 minutes, is it worth this thing ticking 3 ticks against me and me taking a massive loss? Ideally, I want it to be, give me a little bit of movement. How much movement do I think can happen in just 2 minutes? Well, a lot can happen in 2 minutes. Or am I going to let the thing go to expiration, and I'm going for a maximum? This isn't a bad plan, okay? But I'm going for a $50 profit or a $50 loss. I'm not going for in between, okay? So I'm going to hold it, and I'm going to expect that over half my trades are going to be profitable. They're going to be range bound, okay? So you can play the odds in whatever way you want to. Just be consistent. Don't go in one moment, hold the thing all the way to expiration and lose 50, and the next one, don't let your losses run to 50 and then cut your profits short at 25. So either you're managing your trades actively or you're allowing them to run to expiration. So either way, be consistent. All right, y'all have a great day, and we will see you Monday.
Let me tell you something, folks. I have people coming up to me saying, I just can't believe the amount of work that Steve does on his newsletter. And I says, I absolutely agree.
That is a recent clip from the Money Masters show that Tom and I do each day at TFNN. My newsletter service, Mastering Probability, is much, much more than a newsletter. Yes, it's outperformed the S&P 500 by 100% during the last 15 months. But more importantly, it's an extraordinary education, a roadmap for your success. And it's yours risk-free for the next 30 days. Just go to the homepage of TFNN.com and click on my name, Steve Rhodes, and then Mastering Probability, because everyone needs a success strategy. For most, it's a competitive edge, the will to win, the drive to overcome any obstacle. Whatever you call it, winners find a way. Find your way to Mastering Probability today, because your journey to extraordinary rewards is just one click away.